There's a lot of economic data coming out this week. First, tomorrow we have October CPI inflation coming out. And I think, in my opinion, that should come out a little bit lower than estimated considering the fall in gas prices that we saw in October as well as into this month. Currently, gas prices are now about $3 in some states. Look, other states, it's not that price yet. It seems like the national average is still about $3.65 to $3.70. Some states are higher, but this is good news. And then we have on Wednesday producer price index inflation numbers, which is wholesale inflation numbers that businesses face. And that's another key thing that economists and investors are looking at to see how far we've come in our fight against inflation. We have retail sales data. Retail sales count for about 2/3 of the economy because, consumer spending counts about 2/3 of the economy. So retail sales will be an important number to watch. And then we have earnings from Target, Walmart, and Home Depot, which will also be very important in conjunction with retail sales to see the strength of the consumer. We have a bunch of Fed speakers speaking this week about their views on the economy and inflation. We also had a lot last week, so that might create some volatility. But in my opinion, I think we'll see a good CPI and PPI inflation readings because of oil and gas, like I mentioned earlier. And then Ed Yardeni, a market strategist, thinks that because we're seeing we're not really seeing bond sellers as much right now, the bond vigilantes that he likes to call. He likes to call them bond vigilantes. Bond yields aren't spiking as much as they did a couple weeks ago and are hovering around the 4.5 to 4.65% level, which is good news for stocks and could likely propel stocks, at least in his opinion, to 4,600 by year end and 5,400 by end of year 2024. In my opinion, I believe that. I think that the highs we saw in the stock market for the S&P 500 in July at about 4,600 were the highs for the year and will likely hit those highs again this year. And then ultimately, I do expect and agree with him that we'll hit 5,400 by the end of next year. I think either the first or second quarter of next year, there might be some volatility once we see the credit risk to the economy become more paramount than inflation risks and the anxiety of whether or not the Fed will cut rates in spite of some of those credit risks. There will be some anxiety for that, and I think the market might experience some volatility for a quarter. But ultimately, I still think next year will be good for the market, and that 5,400 price level by the end of next year, I think, still stands.